Hi guys, it's Coach Marjorie B here, and I want to give you a gift that you can to end your year with. Importantly, start your new year with, something that can actually power your trading and make a difference between how you've been trading and what you can actually do better. Yes, and I know that this is something that your coach has not, told you, and not because they actually don't even know. Most people don't know. Most people who know don't even use it. But because you're seeing this video, it means that you are interested in doing, what is different that will make you successful than, the 98% out there. It means that you're part of the 2% willing to do, something different. So now I want to tell you something. This is the third time I'm recording this video. It means that there's someone out there that actually needs it. I've done this recording twice using a different platform, and I finished the recording and it just did not show. I can't I refuse to give up because I already know this. I would have been like, oh, okay, maybe this thing doesn't want me to, but I refuse to give up because I know that there is someone, even if it's one person, there is someone this video is going to help, So you just pay attention and take this thing, very seriously. Now it's a trading journal. It's a trading journal, and this is something that I wish, someone had in my very early days as a trader. I wish someone had shown me that, oh, look, there's something like this that you can use this, it can help you. But now that I know, and I refuse to keep the knowledge just to myself. So that's why I'm sharing it with you. And if I were you, I'll ensure I do every single thing that I'm explaining here, so that you can be different and better in the coming year. So let's go into it. I use Google Sheets because I'm always online doing one thing or the other on it. I work mostly with my laptop. So you can use Excel, you can use Google Sheets, yeah, without having to download it on your laptop. If you have a Gmail account, you can easily use Google Sheets. So these are the fields that have put across in this document. And if you can look at the video and maybe copy the fields, set it up on your own. Freely I received, not freely because a lot of things I paid for it. I paid for the knowledge, but freely I give. If you're maybe in my team, in G4, you're in my signals group, you're receiving paid signals from me, you can also request for this and I'll give it to you and also guide you on the percentage to use and stuff. So this is it. Here you have the initial balance. I'm trading with a prop firm account with Funded Next. You can use my code or my link under this video to get an account with Funded Next and power up your trading. So I'm using a 5K funded account. I've gone through the evaluation and I've withdrawn from this account. So the risk on this account, the risk per trade is actually 1%. This is 1% you're seeing here is 1%. So 1%, the risk amount actually translates to $50. As risk per trade in amount translates to $50. So the risk mode, my risk mode is limit orders. I don't trade instant execution for this account. I have maybe accounts that you can say, enter now, I enter now. But for this account, pending orders, either a buy limit or a sell limit. And then if you have a personal account and maybe you started, your initial balance was starting capital was 1,000 that month, and maybe within the month you added an additional $500, you can come here and put additional deposits. The deposit amount, you can just put it there, 500 and all. You're on your way to becoming a serious, disciplined, professional trader. Professional traders document. You don't want to do things by chance. So for me, did I have additional deposits? None, here. If I had, I can easily just, select it. And I don't like every time I'm typing and typing something. So I just put it there. Then I can put deposit amount, but I put none there. So that is it. Then now into the actual, documents. Now the first column I have here was date of the trade was set. I'm going to explain why every field that every column you're seeing is very important. The date of the trade was set. Like here, for this first trade, it was set on 28th of November. So that you can see when you choose your zones, maybe an analysis or, those who do analysis, you want to check how long does it take for this thing to move. I have trades that maybe I looked at it from, maybe higher time frames, and higher time frame trades, they can move, but they move slow and all, because in between lower time frames, we do all their shenanigans and stuff. So it activated, this one was closed, activated on 1st of December. And when did it activate? What trading session? Was it in the Asian session, London session, New York session? So if at the end of the month you see you have maybe like 10 trades, you can say that most of your trades are activating in Asian session. And then you now look further and say all the trades, all out of 10 trades, 5 of them activated in Asian session. Out of the 5 that activated in Asian sessions, 4 of them were profitable. It is giving you a pointer that you should pay close attention to that session. If all your trades are activating in London session and they are mostly profitable, you tell yourself you need to pay attention to that session. Or if you notice that your trades are activating mostly in New York session and mostly they are losses, you need to pay attention. Why are they losing? This is real life data. I told you I'm a student of data analytics. And I work in my line of work as a professional. We pay attention to details. So you can make informed decisions based on numbers. Data is not all about numbers. It doesn't lie. You can see patterns easily. So that's it. You choose for this one, it's activated during the Asian session. Paying attention. You're paying attention to a business that pays you. So now, what's the source? What's the source of your trade idea? Now, for me, I do analysis because I know how to analyze the market, whether there is scanner or not. Scanner also actually gives a confirmation of my confluences that, okay, all your confluences are aligned, you're in direction. That's what the scanner does. So I have the sources and I want to be able to see if I did, maybe like 5 or out of 10 analysis I did in the entire month, how many of them hit TP? How many of them hit SL? Out of the ones that hit TP, which of the pairs were the ones that I treated most, I analyzed most, so you need the information. Now I like color coding, is part of it. It makes it easier for me. So I have the 2 educators that I follow, Nick Gomez, on GFO, Nick Gomez, I follow his trade ideas. Once it drops, I take it, and then Donovan Taylor is trades using the smart money concept, the smart money concepts, and sometimes using the smart monies. So I like his trade ideas, and he trades the pairs I like as well. So I follow his trade ideas. Then I have smart money scanner, and of course I use green because that's the predominant color of the scanner. Sniper Pro predominant color is blue. So it helps me and others. If maybe there are educators in the field that maybe I take their trade and all that, they are not my regulars. I can just put them under others and in the comment section, put it there. So I just left room for others. And then now the instruments that you trade, the asset you trade. For me, this entry in as 100, I have a list of them. I don't need to type them out every time. So I created a drop-down list and stuff. If you're using maybe a book to journal and all, you need to just write every time, and that's fine. So I listed all of them. I simply just select. And then if you have maybe 3 accounts, I don't want to create many sheets and be documenting, you can document all of them on the same account. But then I created this for those kind of people. So you can indicate, was it on your live personal account, or was it on a PropFirm instant account, or a PropFirm evaluation? Your evaluation is still your account still in evaluation phase, you've not started withdrawing from it, or a demo account. Yeah, it's good for you to start with demo, but really, once you've done demo, you want to be able to put your emotions live in the market. Or because demo actually insulates your emotions from the market. So you need, no matter, even with less than $100, you can actually, with I think $32 or so, you can get a 5K evaluation account with funded next, and then, put your emotions in the market and, work your trade. So you can select which of them instead of typing every time. And then the lot size. Now, my lot size that I use, the lot size is not cast in stone. Oh, every time 0.05 or 0.12. No, it's not cast in stone. It's dependent on your stop loss, your SL, and also on the lot size, on your risk amount. For this account, 1% of my or 5,000 is $50. So my risk on per trade is $50. So I based on the SL, for me, that is my risk. Even though this one, I doubled my risk because this was, like the second trade for the week. So I had 3 days that week that I had not used my SL. So I decided to use, my risk for 2 days for that day and the previous day. I just added it, because I like the confluences, that set up for this particular trade. But every other thing is based on $50. So direction, buy or sell, it's either I buy or sell, no two ways. So I put it there. I want to see, okay, the trades that were mostly profitable through the month, maybe were mostly sell trades or buy trades. Data, you need that information. Then, importantly, how are you feeling before the trade? As much as possible, you want to be in a neutral state. You're okay with your analysis, you're okay with, the confluences on the scanner, you're okay with it, and then document. For this trade, I felt neutral. During the trade, I felt neutral. Now, why this is, I have other ranges of emotions that I captured. Capture how you feel. If during this trade you were anxious, document you were anxious. And then you ask yourself, why exactly am I anxious about this trade? Well, am I anxious because I over leveraged? If you over leverage, it's telling you go and cut down. Even if the trade is active, it's not really that move that much. Remove some lot sizes from the market and have peace of mind. And then maybe, why are you anxious? Ask yourself and find out why you're anxious and address that. So for me, I felt neutral. So this is the entry price, the exit, that's TP, TP1, TP2, TP3, your SL. For me, I target 1 to 3 risk to reward, for my trades. And also, but then you can target TP1, you can target TP2, you can target TP3, and then this is stop loss, in stop loss, like price, and then stop loss in pips for this trade idea. So, and this is my stop loss amount based on that my lot size of 0.04, for Nasdaq 100. So that's my stop loss. And then when the market, at full TP, what's the amount of pips at full TP? Is 1,000 because this is a 1 to 4 weeks reward trade. The SL is 250, so the full TP is 1,000 pips. So how many of it did you catch? So how much do you now make now from this trade as either your profit or loss? So for this trade I made, it was break even, $7. Because I moved the trade, my stop loss to entry. I had not hit, my TP target yet, because I'm also learning to go from, yeah, exit TP1 is you just want to be accumulating, but if you're looking for deep profits, TP2, TP3, for me it's TP3, and also I'm learning to hold my trades, to my desired TPs. So now the risk to reward is 1 to 4. If the risk to reward on a trade is 1 to 1, I don't take it. I don't take it. I select my trades. I don't take it. If the risk to reward is 1 to 2, I can just manage it and then at least take something. But really, for growth, for profitability, I target 1 to 3. And if it's 1 to 4, fine and, even good. So now, when you closed your trade, how much was your risk to reward? Now, you know that the risk to reward for the trade is a 1 to 4, but you closed and you check it. Yeah, I got out at a 1 to 1, or I got out at a 1 to 2. I got out if it's at a 1 to 2. When you look at now, you're gathering, you're piling up information, data, so that at the end of maybe a period like a month, you're looking at and saying that, okay, I've seen the pattern that I go out of my trades at, risk to reward of 1 to 2. Why is that so? And then you can make make adjustments and say, why am I going out? Was I running out of the market, or not? Fine, you need to put that as well. And let me backtrack a bit. When you come to this, the SL amount is also, this thing is 100, but then when you notice, when you come here and you document maybe if that trade was a loss, you're supposed to lose $100 as SL. You've settled it before entering this trade. So, but now you now see that your loss was 30 minus $30. Your loss, you look at the history, your loss was minus $20, your loss was minus $40, your loss was minus $70. Why are you having, that inconsistent, losses? Maybe let's assume that your SLs across trades are maybe uniform 100, assuming, because that's not the reality. But then you notice that you're running out. Why are you running out of the market before the trade hits your SL? I thought that when you enter the market, you have made up your mind that you've accepted this SL. So why are you going out before the market hits? Now, the other balance also is that there are times when you see that, look, confluences, this trade, the strategy, the everything, the trend has changed. Your SL is not also cast in stone. The trend has changed, and you see that no, this market is no longer a selling market. At that point, you can actually go out of the market, and maybe your SL is just maybe $30. You go, but why I'm saying when it becomes a track record that you're cutting your SLs, and then eventually you now be like, that trade did not hit SLO, it hits TP and it hits full TP. You're running away from the market. You need to confront that fear. So that's the balance to it. So the SL is actually a guide, and then now the risk to reward is there. Okay, I've explained that already. Now, for me, did it hit the target? Is either I know or yes. Did it hit my 3% target? It did not hit my 3% target. So now how much is remaining? Now my target, my 3% is actually 150. 3% of my account size is 150. So my target is 150. I don't want to have to put it here because it's just be a consistent amount, that I don't need to update. So I already know it. So break even was $7, remaining is 143. So that's just it. Maybe if I was in, if for instance, why this is important is that if you had two trades that activated, that day, and if you look and see that, your risk is $50 SL per trade, but you see that on be monitoring the trades that you set up, you see that two trades are very close to the entry. They are very close to the entry. It means that you're risking $100 that day. So what you can actually do is that you can reset, you can reset the entries and then split your risk into two, $50 in two places, 25 for this one, 25 for this one. And let's say one of them has given you $100 and is remaining $50. The other one is on $25. Now, instead of you to wait for your full TP, you can now bring it forward, reduce it, and then let it hit your target and stuff, and you go out of the market that day. I do that sometimes as well. But if you have a prop firm that has, daily target limits that you must not exceed, but then if it's maybe your personal account and stuff, you can leave it, let it move and hit whatever target. So that's very important to clarify. And then how did I feel after this trade? I felt disappointed. Lightly, there's disappointed, like very, when you feel really disappointed, it's red, very red. And then lightly disappointed is now, why was I disappointed? Is because my trade hit TP1 before it started to reverse. But then I wasn't close to my phone. I was really busy. I wasn't close to my phone to even check the charts through my MT5 or to check on TradingView to see, why the retracements, and then close the profits that I had, knowing that this retracement for sure was going towards back to, entry. Because what I could have done was close and then it goes back to entry. Confluence is still aligned. I can still re-enter that trade or not. Because I saw $80 on that trade. The other thing that could have happened, which I put here as a recommendation for myself, is next time close some lots at TP1 and then set your BE. So when I saw that $80, what I could have done was remove 0.02, start after taking out $40, right? And then when it comes out to hit me on $7, I would have gotten $47 and all, instead of leaving the entire $80, to go back. So when the date the entry was closed, I closed this entry yesterday. Sometimes you can have your trades run. You can have your trades run, and then you can have your trades run, and when your trade runs like that, you can now have it, maybe it took 2 days or 3 days or 4 days for it to hit TP, full TP. And if you look at a particular asset and see the pattern that this trade takes maybe 3, 4, 5 days for it to hit the full TP, it encourages you that when you take that trade idea, you can be patient, you can wait until it hits the full TP. Now, another thing I need to, so that is it on how I journal, my trades and all. So I have other, for the purpose of this video, I just had to keep it so that you see things there. So I have other trades that I've done analysis on and just set them, ready, confirm them, and of course, I'm not going to just share it all here with you. So, but I've already checked the lot size. Once it activates, I'm going to now come and update and put the information where when it's activated, and the rest of the information, there. So that is it, guys. And then I have here a trader's constitution. I'm a successful, disciplined, and confident trader. You can see that it is not by mouth. There is work to be done. I enjoy the process of trading for the lessons and for the profits. So you're not just here for the wins alone. Yeah, you're not a fair weather trader. You're not looking get rich quick kind of trader. Let's enter. And then when you're in loss, you'll be sad. A loss is actually the amount you pay for tuition to learn something in the market. So maximize your losses. So I trade for the risk reward, not just for the money. I will always continue to educate myself on how the market works. So I have all of this. I have a clear and concise entry strategy. I have a clear and concise exit strategy. So those are things that, as I'm saying it every day, is conditioning my mind. Is conditioning my mind. I have a set of trading rules that I follow and obey. So if a trade does not meet my trading rules, I'm not taking it. I trade with detachment to the outcome. It's either profit or it's either a loss. Whichever one, we'll continue to move from loss to loss until we are profitable. Yeah, and also when I find a setup that meets my criteria, I execute without hesitation. I don't overanalyze. I allow the markets to come to me and and I remain patient. So I don't force the markets. If it's not setting up, I don't say I'm jumping in. No, I'm not doing that. So I have this, I'm doing the right things long enough, consistently enough to create my desired results. And I have an affirmation here. I'm so happy and grateful that I'm making $100 in trading profits. And on this account, information for this account. So of course, on an account that is 100K, and then you can make a 500, the affirmation will also change. Yes. So you can customize as appropriate. And if you're probably trading with a $200, $300 account, your affirmation, you won't be saying, let me go and make $100 because you saw Coach Marjorie say it in a video. So customize it to suit your capital size. And then I have a trading plan here, that takes into account, the different lot sizes for different, categories. This is where I decided my risk per trade, profit target, my risk to reward, and then the account size that I use. I'm using a profile account and the rule of the account as well. Then I also have lot size for major instruments, my daily trading plan, my weekly target and projections, even at a 6% win rate, and all doing the right things, I'll still, if out of 10 trades I take, let's say even in a month, I took 10 trades and I lost 4 of them and I won 6 of them, I'm still very profitable. If I lost 6 of them and I won 4 of them, I'm still very profitable. How? Let's quickly do a calculation. I'll delete it. So if I won 4 of my trades, I have, 4 trades. I have four trades. Let's say I won four of my trades. 4 times 150. 150 is equals to 600. 600. And I lost 6. Every loss is actually $50. So 6 times 50 is equals to, no, 6 times 50 is equals to 300. I still ended, my profit will be 600 minus 300. My profit will still be $300. $300. If you're doing the right things, you'll still be very profitable. You still, let's even do this further. If if I won three trades times, three here, three trades times 150 is 450, and then I lost seven. I lost seven trades, that day. Like, my strategy is so bad. I lost seven trades, 350, 350. At the end of the month, I still have $100. I'm profitable by $100. But if you follow the right things, you'll be profitable. Where people miss it is when they think that you need to have, let's say, 1,000, you take three trades every day, you take this, you take that. The most profitable traders don't trade every single day. So I hope you got value for your time watching this video. And I know that you're a coach, you like this and you share with your team, but you come under this comment and say, thank you, Coach Madribi, for sharing this. Is that good? Yeah, so you can just comment under this video if you found value. If there's a particular thing you think you want me to train on or talk about on this channel, you can just drop a message, drop it under the comments and let me know. Yeah, I wish you a very profitable end of year and a very profitable new year.